Well, I got some good news for you, and I have some bad news for you. The bad news is I was filming, there's my case. So I had the most perfect shot, and the upload speeds are horrible. So I'm sitting here trying to edit. But honestly, guys, look at that the color and the face and everything that goes into me filming and the microphone. Oh my gosh. Also, just FYI, yes, I did close that the nat gas position. Also, here's the problem. Here, I'll show you. See this? That basically is like you when you plug your phone in to a cord and it goes. But basically, guys, nothing is going to stop what is about to happen. I'm going to show you some reports. We got the S&P 500, a possible drop to 3,800. I will show you. We have Yahoo is telling us there's no soft landing. I know. We all want a soft landing. The only thing soft around here is probably that bed right there. And we have an economic indicator that goes back to forever that is saying run. Coming in from Market Watch. Is this a weird? Weird? The Fed tightening always breaks something. S&P 500 will drop. Okay, now just underline this. S&P 500 will drop to 3,800 by March. That would be just a few weeks away. Warned Bank of America strategist, U.S. stock market. Here we go. And everyone's freaking out. Right about now, you're like, what do I do? The U.S. stock market near rally is doomed, even though, here we go. The economy may be headed for a so-called no landing scenario, where recession is avoided as the Federal Reserve and Jerome raises interest rates further. And actually, they're talking about even more rate hikes after these, the red hot everything. Okay, but here's the deal. If you look at this, what they're saying, no landing scenario continues with the risk, SLOC, we have a scenario, and then right here, okay, you see that? The 10-year headed, this is what I've been saying it forever. The Fed just follows the 2-year, which would not be this chart right here. I'm gonna jump to the 2-year. This is actually where you close your position. Yes, Bravo took out a loss. Here it is on that swing trade. And yes, there are YouTubers out there that are saying that, see that red line that's going across? That's the lowest it'll ever be. Well, welcome to some new lows. So for those of you that know or don't know, I took out a trade on the green bar. I'll circle it for you. Right. I'm not going to circle it for you, but it's the green one that's over, where's that first one? See the red one, the first red one right here, red 1, 2, 3, and then that's where I took out the swing trade. It's under the 200, so I knew this was going to be a quick get in, get out. Well, we're heading lower. Also, for those of you that are wondering, let's see, you guys asked, it's the yield. Here, let me jump to the yield on the 2-year, which is right there. There is our 2-year that the Fed has to follow. And I'm going to turn on a couple bars for you just to see. And see the orange line? The orange line is Jerome trying to catch the blue line. The blue line keeps heading higher. Also, the blue and red line, you're in a detected pattern. That would be an ascending, broadening wedge. So if you want to see how that breaks, Google it or take my bear market course. So every time that I show you, yes, all of this stuff that I'm showing you right now, everything, it's in there. So grab the discount. What are we doing? 70% off for the month of I don't know. But again, if you are new to this, start with a swing trade. And you're like, but your swing trade didn't work. Look, on Nat Gas, I know it was under the 200. I said this is for experienced traders only, and you need to know that you're going to get in and then you're going to get out really quick. But as you can see, you get out. Now, for most unexperienced, you're just going to hodl. You're going to hodl forever. Also, if you think that was a loss, you should see everyone that was up in the 40s, like the amount of money that people have lost on this. And that right there, my friends, is a head and shoulders. This little triangle pattern, That's where it plays out. It actually hits the Fed funds rate. I'm just leaving that up. It does. There is no correlation. But I mean, it was just like a little bump in the road. Look at that. Look at the top of that. And people are like, well, it's going to come back at some point, and I don't want that to be you. All right, so here is the deal, and I'm moving frames again. Sorry. A lot of apologies. I guess Hawaii does not have Wi-Fi or internet. You guys have anything over here? Investors pull cash from classic risk plays as Fed rate picture shifts. Dump, dump, dump. Fed funds, right? Oh my gosh. London investors turn more cautious. Well, you should be, because you're an investor. What are you doing? Stop being an investor. How's that nat gas play that you've been in for a year, right? Oh, it's all gonna turn around. It could be forever, you guys. That's why I trade. I get in and I get out. Most of the time, my plays are pretty darn good. Also, if you want to look at exactly my exact trades, not just a random one, I have actual daily. I trade every day, and the Wi-Fi is fine. Link in the description if you want to look at my trades. Investors turn more cautious in the week Wednesday, Thursday, Friday, Saturday, according to data from Bank of America, as a run of data prompted many to raise their forecasts for how high the U.S. Federal Reserve will take interest rates. And I will tell you, it's the 2-year yield. They follow the bond market. The bond market is bigger than the Fed. Like what I've been showing and sharing, even though the politicians are going to tell you otherwise. Everything is great. The economy is so strong. You know what's going on, you guys. I can see. Well, I can't. I mean, if you want to show it to me, you can. Your savings gone. I'll show it to you. The credit card. Lance Roberts just did a piece. I'll show you in just a second. I'm kind of excited. U.S. leading economic indicator, and not just indicator, indicators tumble for 10th straight month. Signal? Well, recession right now, immediate or imminent. We're gonna have it. So whether you like it or not, but the stock market went up today, bravo. Yes, but consumers, you can't even make ends meet. Great article, Lance. Good job on this one. He puts it as recession signal as consumers struggle to pay bills. You guys are, what is it, 75%, 100% of the people, it's in here somewhere, there's not even $1,000 savings. 57% of Americans can't afford a $1,000 emergency. 68% of people are worried that they won't be able to cover their living expenses for even a month. Chart after chart. This is why nearly 75% of middle-income families are struggling with the impact of inflation. My apologies. I had nothing to do with it. A signal from credit cards. Yes, credit cards through the roof, but you guys had them all paid off. Commercial bank interest rates are going through, right? Rates are through the roof. Everything's through the roof. You're getting that. But I just got that new car. Oh yeah, how's the 20%? Or your credit card. I cannot believe credit card interest rates are at 20%. And even if this is all true, where everything's actually great, right? The politicians are telling you everything is perfectly fine. Think for a second when we are in a recession. Think for a second when it's gonna be bad. Think for a second that the stock market will actually crash. Well, significant decline. Sorry, there's just too many people on both sides of on the trade, because we make money going down. We also make money going up. You also get caught in a short squeeze. I mean, there's so many things that make markets go up and down. So don't look at the stock market and say, this is me. This is the economy. The economy is not the stock market. Stock market is not the economy. Savings getting tapped by Americans to make ends meet due to inflation. Household budgets have been shredded by high inflation. But you haven't even seen anything yet. Nothing yet. And about 27% of U.S. households reported taking money out of savings just to meet ends meet. Yep. So the bank runs, are you running into the bank taking out money because you can't survive, but you're also going in there and saying, hey, can I get a HELOC, please? can't seem to pay the bills. Let's go ahead and refinance, sweetie. That'll work because housing market always goes. Also, last but not least, apologies for me moving around. I just have a feeling that I have my finger over the audio on my phone, and it's like, you're like, I can't hear you. Nothing's worse than when you're done and you're like, oh, I have no audio. But we need to look at the dollar. Now, for all of you that are really long Bitcoin, I'll show you that in a second. Going back to this chart pattern, this one originally, when it broke, you see when the red line, I can't, maybe I can draw. Can I draw? I just don't know if you guys are going to see it. Can you guys see that? I'm hoping I'm drawing on the screen and you guys are going to see it. That actually is where you're going to, from that ascending broadening wedge, also bear market, of course, if you want to learn how to do this, this is what I'm showing you. It's going to go all the way down there. There's a probability, but let's see if I can get rid of that. I hope this works. Fingers crossed, bravo. Well, didn't want to do that one. Let me get rid of that one. Let me get rid of that, and so I can move it. Okay, so you have this blue trend line. See this trend line that goes back on? This is UUP. If you want to trade it, I'm currently on UUP. People always say, oh, it's the doll, the DXY, the Dixie chicks. This, if you really want to trade it, that's there. That you type in UUP and trade away. Also, I never even mentioned them. I use TradeStation. They give you $150. Link in the description if you want to trade on the screen, which is nice. So you don't have to go over to Webull, or you don't have to go over to, wherever your trading platform brokerage is. I like trading right on my screen, which is nice when you're away. And I'm like, look, it's all right there. But you bounced. Do you guys see where you bounced? You bouncy. Here, I'll circle. Ooh, look. Skills. Look at that. Bounced. You bounced right off that trend line. If the dollar heads higher, well, I got some good news for you, and I have some bad news. At some point, when this one, let me move it, TLT up today. Bitcoin. You guys were asking me on that, why said pump? Well, because that's what happened. Also, I have a course on that one too. Look at this, how to trade crypto. But you went right up to that trend line. Well, then you went above it. I'm not buying it, but and I've been saying this, you can accumulate if you are an investor, or if you just don't know what you're doing. I just said accumulate under 20,000. How low? Well, you draw trend lines and you figure it out. So why said pump? Well, I mean, we found support, okay? It got out of that Lux Algo zone, found support. Okay, could we be heading higher? See that red line? You got to get above that red line. Am I going to go into it? That would be support and resistance, okay? So for those of you, I doubt it. Call me if you think that going into a recession and all the macro data and everything points to a higher Bitcoin, then okay. But yeah, again, what I was saying is accumulate under 20. I have some price targets of there. See that orange line that's way down there? Probably way too low. But again, so there is my take, because you just keep asking me, like, tell us Bitcoin, why said pump? Well, I am not a whale. I don't have the ability to pump like that. But thank you guys for hanging out with me. And no, I'm not on vacation. Obviously, if I'm running around trying to do videos, giving you content, this is not relaxing. But thank you for hanging out, subscribing. Appreciate you guys. Love you guys. And I will see you tomorrow.